The attack on Iran popped the US dollar higher. Is this the start of a new US dollar bull trend or just a fake out? Good morning. Patrick here. Welcome to our macro outlook for the today. Every day, the goal is the same to spot the trends early, make better decisions, and stay aligned with risk. I'm here Monday through Thursday at 9:30 a.m. Eastern Time. So let's dive into this. Okay, so I have a chart here of the US dollar. Now, I want to highlight that the US dollar was and has been up until now in a very distinct bear market. That started back last year around February or March, and literally had the US dollar wipe out close to 10% from its peak to trough during that sell off. Now, we entered a period of consolidation on the dollar that basically saw this basing formation develop. Now, what happened here in January was a rapid and very distinct breakdown of dollar, asking the question, did a new US dollar bear market just resume? And because it was a technical breakdown to lower lows, it did signal the all of the signs that typically would be associated with a breakdown move like that. So now it broke down, and it was what we call a turtle head formation, which is basically a breakdown that doesn't follow through and immediately regains back the trade ranges that were established prior. Now, up until this week's attack, the entire rise in the US dollar had the characteristics of a rising wedge formation with the 50-day moving average acting as overhead resistance. Now, this at that moment, we could not rule out the bearish continuation pattern where the dollar could have broken down and headed down to like 95 or lower. But we were highlighting the importance of that 50-day moving average, which lined up very well with a 61.8 retrace. And so that was sort of the line in the sand, that moment where, look, if things were going to be bearish, then the dollar should stay below these levels and resume its prior decline. Then came this attack in the Middle East, and the escalation happens, and the U.S. dollar goes ripping. And so we have this big US dollar breakout. I mean, at one point it traded with a stone throw away from the 100 handle on the upside, which was where all of these previous highs reside from all of last year, 2025. And so the question now is, did something change, and is it more permanent, and is it going to start a new US dollar rally? And we can't rule that out. The probability isn't zero, but at this moment, only 2 3 days in, it's premature to already jump off the U.S. dollar bear bandwagon and immediately build some super bullish thesis. But there are things we are looking at that will help us find that support. So the first thing that it could be is simply the US dollar just proving that that breakdown was a fake out. And in fact, the only real prevailing thing that continues to dominate is a big trade range that has been the consolidation since literally April of last year. And so, like, is this one big sideways trade range? Well, at this moment, this has as much of a chance of prevailing as a new bull market. So I don't want to already rush to go raw, raw, raw US dollar bullish. But we do know a couple things. Number one, the sentiment towards the US dollar could not be more bearish. There is just so much negativity about the dollar. And typically, when that many people view something to be consensus, then usually it means that the trade has been fully crowded and is likely to counter trend just simply because there's no more room for anyone to get even that much more bearish on the dollar. And so the sentiment was definitely incredibly negative. Now, at this moment, we're going to very likely here get a retest of these highs. And so the dollar even resuming to the upper boundary would be incredibly normal. But what will be the real tell from a bullish perspective is going to take more than a month to develop. Why? Because in this situation, you would essentially need to see whether the dollar is holding all dips, stays above 50-day, retracement zones hold, and that generally a new pattern of accumulation has really started to develop. And that's not going to be transparent on just 2, 3 days of price action. And so we're going to be watching closely as to whether or not the dollar demonstrates that. So, like, what are some of the things I just want to really quickly go through? One, the euro was where the breakdown occurred. Like the euro was the definitive place, broke back down to multi-month lows, and this will be the decider of where the dollar index goes with over a 50% weighting in the dollar index. Now the pound sterling had a breakdown, and so did the Japanese yen, breaking down all the way to its previous lows. So the three biggest currency pairings are all actually declining. But there is something very interesting. I'm going to just look at the Canadian dollar versus the U.S. dollar, the way it would be on the futures, and I want to simply highlight that the Canadian dollar looks actually more bullish and seems to be almost bucking the trend. It didn't react remotely to the same magnitude or correlation that those other big currencies did. And so the interesting thing is that this doesn't look like it's a huge dollar rally against all currencies. It may very well have been a euro-driven decline, and I think that's going to be a key puzzle piece as to whether or not there's a structural dollar move happening, or whether this is really just a euro repricing, and that is definitely going to be the thing to watch. Now, U.S. dollar strength may be a catalyst that keeps a lid temporarily on gold. And I say temporarily because we're actually quite structurally bullish gold. But really, the question we continue to ask is, what is the time frame from which the next leg of a gold bull market is going to occur? Is it all happen right here in the first quarter? Or is it really a second, third quarter of the year story? Is the kind of puzzles we're trying to solve on it. But if the US dollar stays strong, it may dampen some of that gold move and keep a lid or a ceiling on gold for several months if that dollar trend continues. All right. So that's where I'm going to end the public portion here. Going to head over to Big Picture Trading with my members, where today we're going to take a deep dive into commodities. So on every Thursday, Where's the Trade sessions, I go deep into the commodity markets. What are we overweight, equal weight, and underweight in that sector? What are those primary trends? Which stocks need to be hedged and which ones to leverage? There's going to be a new trade that we're putting out on in the lumber space this morning. And so I look forward to talking with my members about that, because that's where we actually turn these kind of bigger analysis ideas into actual trades. So if you'd like to access that, you can try a 14-day free trial to Big Picture Trading. You can find the link in the chat, or you can go directly to our website, bigpicturetrading.com. Once you're in, there's a big orange button that says join now. It starts at 9:45 a.m. So we'll see you there. The rest of you, we'll see you here on Monday, 9:30 a.m. Eastern. Thanks, everyone.